So, rebalancing and portfolio monitoring are, essential components of effective investment management. Periodic rebalancing helps ensure that portfolios maintain their target asset allocations, align with long-term objectives, and manage risk exposure effectively. And regular portfolio monitoring allows investors to evaluate performance, identify opportunities for rebalancing, and adapt to changing market conditions. Let's talk about some key concepts in rebalancing and portfolio monitoring. Now, when we look at the importance of rebalancing, a couple of things stand out. First, it maintains target allocations. Over time, market performance can cause asset allocations to drift from their original targets, which increases risk exposure. Second, it manages risk. Rebalancing actually prevents overconcentration in overperforming, potentially high-risk assets and ensures diversification. So, aligning with objectives is really important. It keeps the portfolio matched up with the investor's risk tolerance and financial goals. Portfolio monitoring is, honestly, a key part of successful investing. Performance evaluation tracks returns, income, and risk metrics to assess how well the portfolio is doing compared to benchmarks. Allocation analysis helps keep an eye on any deviations from target allocations that might happen because of market movements. And opportunity identification highlights underperforming assets or sectors, which can be really useful for potential reallocation. When it comes to best practices for rebalancing, there are a few things to keep in mind. First, set rebalancing thresholds by defining acceptable deviation ranges, like plus or minus 5%, for asset allocations before rebalancing is triggered. It's also smart to consider tax implications. So, evaluate the impact of capital gains taxes and transaction costs when selling assets. Make sure to align with investment objectives, meaning any adjustments should support long-term goals instead of just reacting to short-term market movements. And finally, think about rebalancing frequency. This could be quarterly, semi-annually, or annually, depending on the portfolio size, asset class volatility, and your overall investment strategy.